To talk more about this, we have with us Bhavik Mehta, Deputy Head of Research at Century Financial. Welcome with us, Bhavik, and thank you for joining us at CNBC Arabia. Let us explain what is the reason of the dips today, as there are many factors absent. To what extent can we see those dips are justified by a profit taking after the gains, strong gains, and the high levels which we had in the UAE indices?
To start with, the current leg of profit booking is primarily based on the news that is coming out of the US Iran potential conflict. So we recently saw that the Iranian military is conducting some sort of military exercise near the Strait of Hormuz. That again becomes a very critical choke point for the entire global energy flow. The US side, we have President Trump in power, who is known to be very chaotic, I would say, who is known to be very temperamental. What actually happens as far as that front is concerned is very difficult to predict, but the global risk markets and Gulf markets specifically are taking a lot of beating, I would say, because of this ongoing US-Iran thing. We are seeing the oil prices spike up. So the recent leg, today's decline primarily is based on profit taking, with markets expecting the conflict maybe to have some sort of potential outcome.
These are the external factors affecting the UAE markets. However, the investors today, what shall they focus on in the next stage after that we are done from the earnings season in the UAE markets? What the investors will be focusing on in the markets?
We've already had a record set of earnings from all the UAE companies. Unlike the previous cycles where only financials and typically banks used to perform well, we are seeing all-round performance from across the sectors, including healthcare, information technology, utilities, as well as industrials. The record earnings are behind us. We've had a record dividend year as far as 2025 is concerned. The current focus of the investors will actually shift to what sort of interest rate direction the markets are going to have. Now, there's a lot of expectation that US Federal Reserve is going to cut rates. In my view, that's going to be positive as far as the local liquidity conditions are concerned. It's going to be negative for the banks to some extent, but should a proper interest rate cycle actually materialize, it will be globally risk positive. Gulf markets, UAE specifically, it will hold on to the gains because of this particular thing.
You are aware of the fact that tradings during Ramadan have their own specificities. So to what extent, in addition to what you mentioned, they're going to have calm tradings, volumes, and also values due to Ramadan?
Historically, if we look, yes, Ramadan month has seen lower trading volumes. Retail side, we've seen something like 15 to 20% decline. Certain years it has been higher, but given the set of conditions that we are sitting now, it's not a certain thing that we are going to see definitely lower volumes. So just to give you an example, I think 2024 we saw a record number of block deals by big institutional players that happened during the Ramadan month. This time also, because of the market dynamics, because we're already sitting at new lifetime highs for both for Abu Dhabi index and DFM index is at its 20-year high. Not necessarily we could be in a scenario where volumes are subdued. Typical spike up events like oil prices rising, geopolitical events are going to keep the investors very much alive and active. So maybe not necessarily a condition where lower volumes could be there for this Ramadan. Market liquidity is sufficient at this point of time.
Thank you so much, Mr. Bhavik Mehta.
Thank you.